Hi, my name is Jesse Durham, and in today's episode, we're going to be specifically addressing inflation, how it relates to the infinite banking concept, current events, and much more. Let's begin by asking a question that I commonly enjoy asking when having a discussion about money in general. Let's ask ourselves the question, what did a Coca-Cola, bubble gum cost a year ago, 5 years ago, 20 years ago, 50 years ago? What did a Coca-Cola or a piece of bubble gum, what did any of that, a candy bar, cost 5, 20, 50 years ago versus today? So what may that then determine will happen? What can we gather from that trend for the future? It's possible that our dollar may have less purchasing power in the future, that perhaps it is a depreciating dollar. Now, specifically, the point of inflation, and again, just to put a definition to that, is the overall rise in price, which also then therefore means a diminished purchasing power. So I think that we can answer that question earlier about candy bars, bubble gum, a Coca-Cola relatively quickly, and perhaps deduce that that may determine something about the future of the dollar. With that being said, let's talk about some of these current events that we're experiencing. I don't know about you and where you're from, but perhaps you've had some toilet paper make the news, the gasoline make the news, prices of lumber recently making the news with the real estate boom that we're experiencing, while also experiencing some inflation in other areas and perhaps in general, right? Again, I'd like to address something broad, which is wealth itself. So regardless of what you or I think of at first, it may need some walking out. Here's what I'm saying. If I say the word wealth, we all have some conceived or preconceived idea of what that means, what that looks like. Here is how I would like to clarify what I'm going to say or mean when I say wealth. What I am going to mean is goods and services. Okay, so wealth is truly goods and services, and here's how we can know that. What do we procure goods and services with? Dollars. Okay. But also, in the opposite, what do goods and services sell for or exchange for? Dollars. Here in the United States, in this day and time, at this recording, it's dollars, okay, the United States currency, dollars, that are the means of exchange. Goods and services for dollars. Dollars for goods and services. So wealth is really goods and services. And no matter how many dollars we may or may not have anywhere, what would we do with them? Well, in and of themselves, they're just a means of exchange. So they don't eat like groceries do. They don't burn like gasoline does in our vehicles. You understand what I'm saying? I'm not trying to diminish the value of the dollar. When I say value, I'm not saying anything other than that it is the agreed upon, as of this time, it is the agreed upon medium of exchange. So if we would exchange dollars for goods and services, and also if as providers of goods and services, we would accept dollars in exchange for us providing goods and services, then it is money. It is our means of exchange. Wealth could be described as goods and services. And now I'd like to walk out how inflation plays into all of this. So again, if we recognize that a dollar is depreciating by, again, asking ourselves, what did a Coca-Cola or bubble gum or a candy bar cost years ago versus now? What may it cost in the future? And again, those were all goods. If you would recognize that with me, those were all products of some sort. And again, wealth could be goods and services. So if we see that the trajectory very well may continue, that our dollars depreciate, meaning inflation continues to rise. And that's something that I would encourage you to look up and study for yourself. Is or is not inflation rising or continuing its trend? If therefore we can recognize that the dollar is depreciating, and I'm not trying to cause a scare right there, today and tomorrow, I anticipate both receiving dollars and spending dollars. I'm going to have cash flowing, dollars flowing in my life. You will in yours. Okay. We'll get to other concepts here real soon. But today, the United States dollar is the currency of the world. And if wealth is what it is, if inflation is doing what it's doing, and we recognize that our dollars are depreciating, there are some things that I think are valuable to ask about how we then interact with our need for finance. Because again, as I say often, just because our Nelson Nash said often in his book, Becoming Your Own Banker, we finance everything. And when I say everything, I mean everything. I mean all those goods and services that we would consume or provide. Okay? Where do we warehouse whatever form of wealth that we have? Okay? So we have a need for finance, and that would be using any medium of exchange, which again, we'll get to. So if we have a personal need for finance, or a need for finance in a business or a side hustle or an investment portfolio, whatever the case may be, if we have a need for finance, inflation is one of those things I would suggest we shouldn't necessarily ignore, especially when we're using depreciating dollars now, and we're commonly told to put our dollars in various places. And again, I'm not telling anyone to put their dollars anywhere outside of a bank that you own and control. Whole life policies that have been properly structured for the banking purpose with mutual companies that pay dividends and have done so for well over 100 years. I would suggest that we consider the act of becoming our own banker. But what you do with your capital, your dollars, your funds, your money, that's completely up to you. Do your due diligence. I suggest that everybody start by becoming their own banker. Much like Nash said in his book, Becoming Your Own Banker. It's so easy to focus on what we do with a small percentage of our cash flow, our savings, if we are saving, and many of us are not. Do we do something in the market with that? Do we do something in real estate with that? Do we invest in precious metals, EFT? I mean, just on and on and on. And again, we can get to some of those things. That's interesting discussing. But if we only focus on a portion of our cash flow for investment purposes, we're overlooking the much greater need that we have for finance. And even in looking at whole life insurance, Nash always said too that our need for finance is greater than our need of a death benefit also. Now, that doesn't completely disregard the death benefit, because the cash values in policies that you own and control are net representations of a future death benefit. So, if we recognize our need for finance, the trajectory of inflation that it seems will continue, that our dollars very well may continue to depreciate, that we as consumers in this vast world that we live in may be susceptible to the prices of toilet paper, lumber, gasoline, different things that, at least at the time of this recording, again, they're in the news, they're forefront. If we're going to be susceptible to that, and that's not going to change, perhaps we could consider what we can do to offset that inflation. Now, I'd like to use something right from the Becoming Your Own Banker book that R. Nelson Nash described as he was formulating the concept of infinite banking and someone becoming their own banker. So in the same year that all these things were formulating in his mind, and as he says in his prayer life, it was being forged in the fire. He had a brother of his pass away that year. not very maturely aged. And he also had a grandchild right after birth. Find out that she had cancer, and his family was dealing with that. And at the time, being in real estate himself, he had, I believe it was a little over $500,000. And again, at that time, we're talking about the 80s, if I'm remembering correctly, but please consult the book, that he was paying 23% interest on $500,000. And these were on banknotes that had to be renewed every 90 days. And it was just a horrible collection of experiences that caused him to consider what avenues of options he would have to take care of these various things that he had going on in his life. And that's, he says it so well, it's worth reading in his book, Becoming Your Own Banker, about how it all came to be, that he realized the value of the cash values in his life policies, whole life policies that he owned at that time, and how that was the genesis for what we can know and enjoy now from his written works. Well, what I'm saying is, in regards to inflation, much like in the example from Nash himself, where he had these notes where things were going great, things were booming in a big way. He there was a reason that he had, right at $500,000 worth of notes on real estate and properties and things. It's because things were happening. But when those things were called, and he wasn't in control of the interest rates that he was then required to pay on that outstanding amount, he realized the value of what it would mean to be his own banker, to be able to dictate the terms of how much he would pay back, how often he would pay back, if he would pay back in a crisis such as what was described in his book. And I would propose the same question to us now to consider. In the best of times, would we want to be beholden to a third party, where the terms and conditions are not set by us, they're set by someone else? Interest that we pay, again, we don't dictate how much, but whatever interest we pay goes to grow and scale and capitalize someone else's business that we don't own. Therefore, we don't receive the dividends, we don't receive the interest and the profits from that business. So we're scaling someone else's business with our capital, with our interest. They're receiving dividends. We don't dictate the terms and the conditions. We are beholden to them in the best of times. So again, imagine in the worst of times, where we experience an overall rise in inflation, times of inflation, while our dollars continue depreciating. So again, I'm just suggesting that inflation is something that we consider. I believe that we're living in times of inflation, and I believe that trends in history being what they are, examples to us to learn from, that we very well may see this trend continue, expand, augment, perhaps so as well. So dive back into Nelson's work, look back at his example, and then examine in your own life. To whom do you wish to be beholden, in the best of times or in the worst of times? Now, I'm a student myself, so I highly encourage everyone to read, to do your own research. Sure, dive into Nelson Nash's works. One of the great things that I love about Nelson himself was he was always so open and honest and upfront about how much he read and how he was a student, and he naturally preached, the arrival syndrome. That's one of his core principles in his work, Becoming Your Own Banker. So he was always studying and learning. I am as well. I encourage you to be. I say that to say I have done more looking into, history, personal finance, things that are going on, have been going on, that I was just perhaps ignorant of, unaware of. And I'd like to share a couple things here. So let's take a look at our U.S. Treasury, for starters. The U.S. Treasury prints dollars. Now, that's a part of this process that they do, okay? Now, if you've also heard of the Federal Reserve System, I would like to point out some things that I haven't always known. If you have, that's great. Again, I'm a student, I'm still learning, but what I do know and understand is that the Fed, the Federal Reserve System, does not print the money. Okay, so the U.S. Treasury is formally part of our federal government, whereas the Federal Reserve System is not exactly federal in the same way that actual government entities are, nor does it perhaps hold the reserves that we would expect. Again, we must remember that the dollar is a fiat currency now. It is not tied to a gold standard as it has been before. Again, I encourage you to look into that more, research that more. It's just interesting to know. So we are using a fiat currency as of now. We're not tied to a gold standard. And the Federal Reserve System, according to the Ninth Circuit Court of Appeals, is a locally operated, independent corporation. Okay? So they are in charge of monetary policies. Okay? The U.S. Treasury will print according to the monetary policies of the Fed, the Federal Reserve System, which is in charge of regulating banks, supervising banks. There are actually 12 Federal Reserve banks throughout the country. There are 7 governors on the board of the Federal Reserve System. They're appointed by the president. So I would like to point out that the Court of Appeals, not the Circuit Court of Appeals, in the United States has said that, the Federal Reserve System, it's an independent, locally run corporation. So it's not part of the government, yet it is, dictating monetary policy, not directly from our executive branch, not directly from our legislative branch, naturally not so much from the judiciary branch, even though I've already quoted where the U.S. Court of Appeals has, due to court cases over various things, said that the Fed is independent and locally, run organization, corporation. So it's private. These are private individuals running this organization. These are privately owned banks representing these different areas, districts in the United States, and they're the ones monitoring, supervising, setting policy for everyone. So what I'm trying to say here is, perhaps the legislative branch is the most indicative of a particular state's wishes. Perhaps so. Perhaps so. We all get to vote for a president, who will be in our executive branch, and we do get to vote for, judges that may be in our counties, perhaps our states and different things. But our representatives that we vote for that pass legislation, even they are not representing us in this monetary policy being. So all I'm saying is that it's very interesting. It's worth studying, looking at. I'm not trying to go too deep here. I'm sure there are plenty of folks that are way ahead of me here. I'm trying to cover enough to relate to how inflation touches with the infinite banking concept. And as a side note, let me throw out, why does the United States currency not say anything other than "in God we trust"? And I'm not trying to go on a religious tangent here, but I would like to point out it doesn't say "in government we trust." So I'll leave that right there. Now, also, I would like to encourage everybody, if you have not yet, go and check out for yourself the U.S. Debt Clock. It's at the usdebtclock.org. And you can even look up for your individual state there, just lots of different numerical points of reference. It's very interesting, but check out the U.S. debt clock just to see how that's grown over time, where each individual state is at. It's very interesting. And I say that again in relation specifically to inflation because it would seem, and again, there are a lot of things moving at the time of this recording here in early 2021, but it would seem that a great percentage, I've heard 20%, okay, and that would be something like $1 in $5. So something like 20% of the currency printed in the history of the United States has been done in the past several months. Now, again, just think about how long we've been a country, how long we've printed currency as a country, and then just see what that could mean, both for now and in the future, that we've printed that we may have printed one out of every $5 that's been printed. That's just food for thought. And I would like to carry that into looking at, okay, Jesse, we've talked about government, we've talked about banks, we've talked about, the definition of inflation. What is the rubber meets the road, tactical, pragmatic information that I can take from here if I'm vetting this idea of becoming my own banker, or if I already have a policy or policies and I'm building out my system, I'm building out my privatized banking system. Okay. I want us to, again, remember some concepts that we talked about. Money. If we recognize that we are doing things every day with depreciating dollars, whether we're building up wealth, whether we're consuming things, again, if we recognize that a dollar is just a means of exchange, but that it's a depreciating dollar, let's consider then the value of being able to having a contractual right to pay fixed premiums, meaning someone can't force it to go up, okay? Paying fixed premiums into an entity that we own and control, wherein we can access the capital, the cash values of whole life policies that have been properly structured with a mutual company that pays a dividend. So we can contractually pay fixed premiums with depreciating dollars in an appreciating environment. Pay premiums into a policy where there is guaranteed growth. Guaranteed growth. Meaning on weekends, holidays, when the markets close, etc. Okay? Guaranteed growth. That's not including a dividend. And historically, I'd like to point out some fun things right here, that if we consider these whole life companies, and again, I'm not married to any one particular company. I'm married to my wife, but I own multiple policies with multiple companies. And right off the top of my head, I own policies with a company that has paid a dividend for 140 years so far. So you can see why I imagine that I have a very respectable, I've actually already gotten the statement this year. I've got a very respectable anticipation of receiving dividends in the future, much like I have since we've started owning these policies. So these companies have weathered the storms of recessions, depressions, world wars, global conflicts, government shutdowns. I mean, just think about the history that has transpired over the past 100 plus years. And these companies have paid a dividend consecutively every single year. That cannot be overvalued. The right to pay contractually fixed premiums into a policy that you own and control, with depreciating dollars in a guaranteed appreciating environment. It's a beautiful thing. Now, concerning the Federal Reserve System, I would like to be able to point out that the Federal Reserve was formed in 1913, whereas life insurance policies have existed for over 200 years. So life insurance has been in existence for centuries, and everything that the Federal Reserve does or is supposed to do to regulate, to supervise, to monitor, to adjust, to make sure that there is a steady interest path. Okay, everything that Congress says that they're supposed to do, to make sure that employment stays good and all these other different things that somehow they're supposed to do as a private but often thought of as a public federal entity. All while their purpose is to provide all their profits to the federal government. All their profits after dividends have been paid to member banks. Now, I'll just leave that there. Do your research. I'm saying it's an interesting thing to see what that looks like and what those numbers are. So, again, whole life, companies that are in existence now that have been paying dividends. So, the contractual growth, but then also a dividend above and beyond that, has been paid for well over 100 years. And these life insurance companies have been, life insurance has been around for over 200 years. That's incredible to consider. So I know that this very well may have been just getting into the shallow waters of, what is a fiat currency? What is the Federal Reserve? What is inflation? What does that mean to me? What does it mean to you in your business, in your investing, in your household? How to consider inflation when vetting the idea of the infinite banking concept, or how to consider inflation already as a client. Obviously, we have many clients that listen in and they already have their first policy or they already have multiple policies. I do believe that inflation should not be disregarded. And for those of us that are practicing the infinite banking concept, we're already making massive strides towards not abdicating the banking function to someone else, where we are at the whims, of inflation that is completely out of our control. Whereas instead, we're paying premiums into policies that we own and control, wherein we can access the capital in the event of anything that we finance. So again, that could be for running expenses, that could be for emergencies, that could be for scaling and growing a business, that could be for accessing capital for investments. It's the infinite banking concept. So just by practicing the infinite banking concept, we're already taking, inflation by the horns. We have to keep our eyes open. We have to keep learning and studying, I believe, but we're already making strides. So I hope that this has been helpful. If you have any thoughts, questions, concerns, I'd love to be able to hear about them in the comments on this video. Also, if you'd like to have a conversation about how you could implement the infinite banking concept in your household, in your business, your side hustle, your investing, whatever it is that you're already doing, I'd love to be able to have a conversation about how you could implement the infinite banking concept. So you can reach me at 828-817-4223, or you can email durhamtalents@gmail.com. This has been an absolute pleasure for me. I hope you have a great day. Take care.